The global economic environment remains challenging. Most major advanced and emerging economies are experiencing a synchronized growth moderation. This has been partly attributable to the slowdown in global trade activity amid unresolved trade tensions, which have also contributed to volatility spikes in financial markets. GDP growth across major economies moderated further in the third quarter of 2019. In advanced economies, the slower growth was due to the slowdown in investment and trade activity, while private consumption remained stable. In the regional economies, growth was affected by the weaker external demand conditions. In some economies, there were also signs of adverse spillovers from weaker trade into private sector expenditure. Nevertheless, monetary easing and other policy measures provided some support to domestic demand. Global policy uncertainty has been elevated since early 2018, particularly following the emergence of trade tensions as well as several geopolitical developments, including Brexit. This rising uncertainty has contributed to bouts of financial market volatility. Private consumption growth moderated but remained firm at 7% in the third quarter. While labour market conditions remain supportive, household spending continued to normalize from the strong tax holiday spending last year. Moving forward, private consumption growth will remain supported by continued wage and employment growth. In addition, measures in the recent budget will provide additional impetus to household spending. As such, effective execution of these measures is critical. As mentioned earlier, employment and income continued to expand in the third quarter, supporting household spending. Despite moderating wage growth in the manufacturing sector, services wage growth remained relatively sustained. Retrenchments in the first 9 months of 2019 were higher at 24,600 persons. Nevertheless, employment rose to 15.2 million persons in the third quarter, compared with 14.8 million in 2018, which represented an increase of 358,000 persons in the first 9 months of the year. In addition, unemployment rate remained stable at 3.3%. Private investment growth expanded marginally by 0.3% in the third quarter of 2019. The performance was weighed down by weak machinery and equipment spending amid weaker external demand and business sentiments. The current account surplus of the balance of payments amounted to 11.5 billion ringgit, or 3.1% of GNI in the third quarter. The goods surplus widened to 30.8 billion ringgit as the decline in import growth outpaced export growth. The services account registered a smaller deficit of 1.6 billion ringgit. This was driven by an increase in the travel account surplus following higher tourist arrivals and per capita spending. Meanwhile, the primary account registered a larger deficit of 12.2 billion ringgit as profits earned by foreign investors in Malaysia continued to outpace that of Malaysian firms investing abroad. Looking ahead, the current account is expected to remain in surplus, driven by sustained goods surplus amid continued demand from key trading partners. Headline inflation was higher in the third quarter, mainly reflecting the lapse in the impact from GST zeroization between June and August 2018. For 2019 as a whole, the average headline inflation is expected to be low. Moving into 2020, headline inflation will remain modest, although it is projected to average higher than in 2019. This reflects factors such as the expected lifting of fuel price ceilings amid relatively subdued global oil prices and policy measures to contain food prices. Underlying inflation is expected to remain stable, supported by continued expansion in economic activity and in the absence of strong demand pressures. The MPC will continue to ensure that monetary policy is calibrated to provide sufficient accommodativeness in order to remain supportive of economic activity while safeguarding price stability. Monetary policy going forward will be data dependent, assessing incoming information for any materialization of a shift in the balance of risk to the outlook for domestic growth and inflation. With the performance in the third quarter, the Malaysian economy registered a growth of 4.6% for the first 3 quarters of 2019. Looking ahead, we continue to expect the Malaysian economy to be sustained for the rest of 2019 and 2020, underpinned by private sector spending, recovery in the commodity production, operationalization of new facilities in the manufacturing and mining sectors, and the resumption of large transportation projects. Downside risks remain in the immediate horizon, stemming primarily from external factors. Bank Negara Malaysia will continue to remain vigilant and monitor this risk and its implication on the overall growth trajectory.